going to say, of course, that's for people who celebrate that American holiday. And yeah, to me, I like that holiday. It means something. Um, so, of course, traditional markets are closed today. Obviously, crypto markets remain wide open because they are 24/7, right? They don't stop ever, regardless of the day, the holiday, the leap year, or whatever it is. Now there are some cryptos that do close once in a while. Usually the ones that do that have some kind of a religious component to them, right? There's some halal cryptos that don't trade on Fridays, or kosher cryptos that don't trade on Saturday, or you know, uh, religious Christian holidays that don't trade on Sundays. So there are some coins that don't trade a day of the week. I imagine there's probably other ones from other religions too, but certainly the three major Abrahamic religions each have their own set of coins that don't trade on their given Friday, Saturday, or Sunday holy day, and other holidays in their calendar. But the bulk of crypto, obviously, is 24/7. That's kind of the one of the beauties of it, if you will. It is always open, and in many ways, it adds to its real characteristic as a capitalist tool, if you will, right? Especially, well, as long as it remains essentially unregulated, which, on the one hand, yes, creates more risk. On the other hand, creates more reward, and at the same time, should reinforce good risk management behavior, right? Because it's very easy to lose your assets if you don't manage your risk well, especially in crypto. So I would definitely say bear that in mind. Um, so what is happening with the crypto market? Well, the crypto markets have been taking, for the most part, a nice little dip over the past day, which is not a surprise, really. Right? They just continued to dip down, moving along with the VEPs. On lower time frames, they were having some very nice distributions and mean reversions and distributions and mean reversions. And last I looked, they're continuing to do so. Yeah, of course, you could find exceptions to the rule. Yeah, meaning there'll be one or two that are, for example, on Friday, when a lot of assets started dipping, the Litecoin kept going up, and also into Saturday. But then it started to dip a little bit, and then it began yesterday to move back up a little bit before it started. So you can see, there's not always a direct correlation 1-to-1 exactly, obviously, between whatever Bitcoin or Ethereum are doing and the rest of the market, right? Sometimes there will be different interest in different coins. There will be different buy pressure or sell pressure in different coins. But usually, for the most part, there is a relationship between the buy pressure and sell pressure of multiple coins, especially we're talking about the leading coins, yeah, like the top 100, even the top 50, or what do we call top 100, top 200 even. There's millions of coins, so top 200 is nothing. But yeah, so the top, top 200 coins or top 100 coins. There are many systems that buy and sell multiple coins at the same time, right? They just do it in proportion. So say you have like $1,000 for trading, or $1 million, or whatever, any number. You wouldn't put all of it in one basket if you use a diversification portfolio strategy that's automated, or even not automated, but it's obviously easier to do when it's automated and causes more of the correlation that people think they see. So then you have your little bot execute It could be DCA orders. It could be you might be trading on lower time frames. You might be trading swing time frames because you do that, whatever. And people will buy. Let's say they'll buy $1 worth of Bitcoin or $2 worth of Bitcoin, and then less than that for all the other coins. $1.98 for Ethereum, $1.96 for Ripple for whatever XRP, $1.95 for Litecoin and ADA, $1.94 for Monero or whatever. Like, it's just, you go down the list and you proportionally get smaller for each one, right? And that way you can spread out you do the proportions based on what you think your risk reward is for each one, and you have ways that you can manage that quite efficiently if you're using these little kind of trading systems that lets you do that. Now, the reason that I don't do that kind of thing is because that's basically going to get you an average, typically, of what the market is doing if you are, if your tool is good enough to trade correctly, right, to buy low and sell high, in all those cases. But here's the thing. If you want that average, like if that's something that really actually you're interested in, there's actually a much easier way to do that. And there's about 6 different coins, which if you get them, it could be a dozen, right? But you could really boil it down to about 6. That if you get them, you're really going to have like a basket of assets that are going to generally deliver on average what the whole market is doing on average. And so that's something you can do. Now, does that do those 6 change from time to time? Sure, yeah, a little bit, not very much, but they do change from time to time. For example, like 5 years ago, right, in 2020, maybe you wouldn't have included Solana on that list, or 7 years ago you wouldn't have, because it wasn't trading, right? But now it's probably one that you would include on that list. And I know all the purists, you're going to tell me, but it's not a real decentralized cryptocurrency. I'm just talking about a trading asset here. Okay, it is a crypto. It's not decentralized, but it is a cryptographically signed currency. That is what a cryptocurrency is. It is that. No, it's not decentralized. Yes, it is a centralized project. So what? Right? From a trader's point of view, don't care. Right? It's fine. Yeah. So there's still, there's about a dozen or so that you could pick from, and you can easily make like half a dozen of them be like your basket, and then you don't have to trade 100 things at once, because honestly, that can be a little bit hard to manage. Now, if you're just going to DCA 100 of them at once, well, you got to be careful, because you don't want to lose your assets just because, some random number 97 of your picks went completely south and disappeared, which is going to happen a lot of the time if you have that many assets. If you're managing them very tightly and you're actually reviewing all of them every day, which I can assure you most people are not doing properly, right, then by all means, that's how you like to do things, have at it, right? But keep in mind that, you're carrying additional risk if you're swing trading this stuff. And even if you're not in an open position, you're still swing trading it if you're just holding it overnight or long term. Why? Well, technically, if you're holding something but you're not in a position, you're long, right? Because you're hoping the price goes up if you're holding it. Maybe you don't care if it goes up or down tomorrow or next week, but you're still long, right? Even with a naked open position, like no open position on the exchange, you're just holding some in your wallet. Technically, you're long. right? You're bullish, which doesn't mean you should never hold any assets. Of course, you should. If you're going to invest and have stuff in your portfolio, you're long. Right? Now, if you want to hold short positions in your portfolio, then okay, then you're short on those positions. But the default of buying the asset means that you're long, right? And if you're long on positions overnight or over weeks or months or years, you got to be careful and monitor those positions, right? Because I mean, sure, I get it. If you're just DCAing something like Bitcoin or whatever, and you just view it as a very long-term hold, and you don't care if the price goes up or down, and you realize how it tends to go up very nicely for a while, and then tends to drop very solidly for a while before it comes back up again for a while, and you believe all that 4-year cycle stuff, which is complete nonsense, but you buy into it, and that's your modality. Then by all means, have at it. That's what makes your day. Again, I would not recommend the whole 4-year thing because it's complete nonsense, right? Complete and utter nonsense. Yeah. So, well, what does that mean for you? What am I trying to get at here? I'm trying to tell you, it's again 90% of trading. Call it 70%. I don't care, whatever. Vast, overwhelming majority, definitely more than one standard deviation of trading, is all about risk management, right? You don't have risk management, you got bupkis, as they say. And I mean that. You really 90% or maybe 70%, right? Percentage-wise. Does that mean that you can't trade without risk management? No, you can, and you're probably going to lose money. How much? Probably all of it. I would not trade without risk management, that's for sure. It makes no sense at all. It is completely silly. And why anybody would is beyond me. Because that's the surest way to lose your money, right? And it's the surest way to make money if you do it well. But yeah, at the moment, we're seeing, generally speaking, the markets are, they've dumped out quite a bit, and now they're either flat or starting to rise a little bit. I mean, I'm talking about crypto. From their weekend lows. There's a bunch that are in the green very little bit at the moment. There's some that are making nice. Like Cardano's up nicely. And there's a few others that are up, 3, 4, 5% as well. But overall, Litecoin, Bitcoin, kind of flat a little bit. Binance, Solana's down actually almost 2% still on the day. Tron's pretty flat. Stellar's pretty flat. Sui's flat. Shiba flat. Hedera Hashgraph flat. There's a lot of, if you look at like a heat map, for example, you see it's very red and green and gray, and there's a lot of gray, and there's a bunch of green and a bunch of red. A lot of the tiny coins are definitely more red than green. I'm talking like the super low liquidity coins that are down in the you know, under $10 million market cap. You know, they're just, you know, they're relatively very small projects. And even the stuff that's up in the $50 to $100 million range is, well, it's quite mixed already from that point. But yeah, anything like under, you know, 10 or 20 million, there's a lot of red under the 10 million mark. But around 10 million, 10 to 12 or 15 million, pretty flat right now. But yeah, again, all depends. Those are the tiny, I mean, those are really small coins. And if you're trading those kind of things, you got to be really careful, right? Because you're talking super low liquidity. So if you have any decent sized position in any of them, you got to be careful when you're trading that kind of stuff, because if you try to take your profits out of something with such low liquidity, slippage is going to be a major factor, right? And it will eat away at your profits. No question about it. Right. That's why if you want to remove that, element of risk, it's quite easy to do. Just don't trade things that are super low liquidity. Only trade majors. You know, trade, like I said, the top 100 or maybe even 200 coins, and keep yourself limited to that. Like if it's not on page 1 and or maybe page 2 of CoinMarketCap or CoinPaprika or any of those, you know, coin tracking sites, you probably don't want to trade it. Is all I'll say about that. You know, you might think it's fine to trade it, whatever. But like, I mean, I don't know. I wouldn't in good conscience recommend to somebody like, hey, why don't you go down to like position number 3,000 and see if you can find something there worth trading. You might, or you might be aware of some alpha on one of these low liquid coins. It doesn't mean it's wise to trade it, right? You if you're aware of some inside info, which in regulated markets is completely illegal to trade based on that, but in not regulated markets like crypto, well, it's not regulated, so people do it all the time. Apparently, you know, they even have groups called like alpha groups, right, where they supposedly share leading kind of first to market or pre-market information. And some of these groups are free to join, some of these groups are not free to join. Whether you get any value out of them or not is more than probably hit or miss, meaning it's not reliable. You might get some good info, but you might also just get a bunch of garbage if you're not in a good group. Anyway, why am I telling you all this on President's Day while the traditional markets are closed? Well, it's partly to tell you that the markets are basically doing what the VEPs always indicate, because that's what the VEPs do. Second thing is, over in the Alpha Trading Discord server, we are having a sale today that's going live any minute. So there's going to be a George Washington birthday / President's Day sale where you can get access to our Pro Traders subscriptions of our Pro indicators at a discount, whether you buy the 1 month, 6 month, or 12-month package. Or you could also get a discount if you want private tutoring, which is you get like a dozen sessions to learn how to trade with our tools, and you learn from either myself or Bilbo. It could be any of the co-founders, but it's typically one of us. It's only co-founders. We don't farm out the ability to teach other people. Right? We hold that internally just to make sure that we're delivering the best possible quality tutoring that we can validate is, you know, high quality. And you get not only a dozen sessions with us, but you also get a full year of the Pro Traders subscription. So that's included in that. Plus, you get access to the DM of whoever is your tutor, like on a whenever you need basis. Apart from that, yeah, it's a good time to join our server anyway, because you can always come in and for free get access to the free volatility starter pack. That's available every day, not just on holidays. And you get all the trading information you need to learn how to use those tools to trade for free. You can join the live streams. You can join, it's totally free. Once you're in the server, you can be in the live stream. You can participate in the live stream with your own voice. I mean, not just by text chat, although you can do that too, just like you can on Rumble when you watch us there. If you watch us there. Or if you watch here on YouTube, you can also be participating in, but we don't stream on YouTube anymore. And the reason we don't stream on YouTube, if you've ever heard of a shadow and a man, and they meet and they work together to block channels quietly. So that's happened to our Alpha Trading channel on like every platform we've ever put it on. YouTube, Twitter, LinkedIn, Facebook, even TradingView. It was on TradingView, and it was rising very nicely in its popularity. And then one day, one of our live streams got picked as the editor's pick, and that obviously pissed some people off, because that was like the peak of our we were rising very nicely, and then we had very, very nice growth. All of a sudden we had an editor's pick. We had tremendous, relatively for us, tremendous views and engagements in that live stream. And then from the very next day, our views and engagement fell off a cliff. Like, they just decided, nope, too many people from the traditional TA world saw this and got upset and messaged us about it, or I don't know what they thought, but clearly giving us the editor's pick and seeing us get a tremendous response from it, in terms of a lot of engagement and a lot of, relatively for TradingView live streams at the time, upset some people. So even there, we ended up getting shadow banned. And so we stopped posting videos, stopped streaming there. And then shortly afterwards, they stopped live streams there anyway, which is, I don't understand why they would do that, but they did. And now they let you post videos as ideas. Well, we don't do that on TradingView. So we don't post on TradingView. We don't post on YouTube, at least not regularly. Maybe once in a while we'll post something. But our videos are live streamed from Discord, and they go out to Rumble now, which is obviously a much, 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 much tinier platform than YouTube. But at least so far on Rumble, well, there have been some indications to the contrary, but so far, we're still able to stream there and see what seems to be a growth model. We've been streaming there now for just over a year. So hopefully we'll see that continue to grow. But considering how many trading channels there are on there, most of them obviously get practically no views, because that's 5 million of users. But there are some who get, many hundreds, if not thousands, if not even tens of thousands of views every time they post a video. And when you realize how poor their content is compared to the information that we're sharing, some of them don't even put any, like, they just literally will show a chart automatically just updating, and they don't even talk. And they get thousands and thousands of views when they're supposedly live streaming. They're just, okay, they're live streaming a chart. They're showing they're not. Nothing. It's nothing you couldn't see by just loading up that exact same chart with those exact same indicators if you wanted to. It's just ridiculous. I mean, people honestly are hilarious. Um. Anyway, guys, that's all I'm going to say for now. And again, if you want access to the TradingView indicators from Alpha Trading, just go to the Alpha Trading Discord. It's at alphatradinghq.com/discord. Do that. Enter. It's free to enter. Free to get the free volatility starter pack. And again, today and today only, at least until the next one, next sale. But there's a 1-day sale happening. So yeah. So happy President's Day. Happy George Washington's birthday. See you guys later. Peace.